Welcome to my channel. I'm Scott, and in this video we're going to talk about the statement of changes in equity. You're probably not too familiar with this report. Some investors look at the income statement and balance sheet, a smaller percentage look at the statement of cash flows, and a much smaller percentage look at this report, the statement of changes in owner's equity. The first slide we're going to talk about is what is equity, then what is the statement of changes in equity. We'll look at Microsoft's equity section of their balance sheet, then we'll look at their changes in equity report, and then a summary at the end. Equity is on the balance sheet. It's assets minus liabilities. If you're looking at a balance sheet of a private company, they call it owner's equity. If it's a public company, it's called shareholders' equity, or sometimes stockholders' equity. Equity is the value that would be returned if the company liquidated all their assets, used that money, and paid off all their liabilities. Whatever's left over is due to the owners of the company. Sometimes there's no money left over, so the equity holders don't get anything, because common equity holders are at the bottom of the pile. Preferred shareholders get paid before common shareholders, and bonds get paid before preferred shareholders. So if a company does go bankrupt, there's usually nothing left for the common shareholders. You need the equity number to calculate return on equity. That's net income over equity. And you also need the equity number to calculate the price to book. That's market cap over equity. Let's discuss the report statement of changes in equity. If you look at a 10K or 10Q, sometimes you look at the income statement, then balance sheet, then statement of cash flows. And then you see the changes in equity report, and almost everybody skips that. This report breaks down the changes in the equity from one period to another. This report will show you the company's profit or losses from operations. That's called retained earnings. It'll also show you the dividends the company has paid out, if they issued or redeemed any stock. It also reports unrealized gains and losses, and some companies have non-controlling interest. For example, if you look at Coca-Cola's balance sheet and you look at the equity section, there's a dollar amount for non-controlling interest because Berkshire Hathaway owns 10% of Coca-Cola, and that non-controlling number is Berkshire Hathaway's ownership in Coca-Cola. This top chart is the equity section on Microsoft's balance sheet. Their equity at the end of the first quarter 2021 was $134.5 billion. You can see that right here. And it was $162.9 billion at the end of the first quarter in 2022. So their equity increased $28.4 billion. Whether the equity increases or decreases, you don't know if that's a good or bad thing. You need to understand why it increased or decreased. In the first quarter of 2021, their additional paid-in capital was $82.3 billion, and that went up to $85.8 billion. So it looks like they issued more stock, about $3.5 billion worth of stock. Most of the increase was from retained earnings. That went from $51 billion to $80 billion. Retained earnings is a sum of all the company's prior net incomes minus the sum of all the dividends they paid out. So it's the company's profits after paying out dividends. Accumulated other comprehensive income went down from $1.5 billion to negative $2.5 billion. Accumulated other comprehensive income shows us the company's unrealized gains or losses. And most of these unrealized gains or losses are from investments, pension plans, or hedging contracts. The most common hedging contracts are interest rate contracts or foreign exchange rate contracts. If you see a really big negative in AOCI, that could alert us to a potential realized loss in the future. Say you invested $50,000 into a company's stock last year, and now your stock is worth $60,000. You have an unrealized gain of $10,000. You do not have to pay any taxes until you sell the stock. And if you bought $50,000 of stock in a company last year and now it's worth $40,000, you have a $10,000 unrealized loss. So you couldn't use that unrealized loss to bring down your taxes. You have to sell the stock first. You have to realize it. If you look at the income statement on Microsoft's 10Q, then you go to the next page, you'll see their comprehensive income statement. The comprehensive income statement includes unrealized gains and losses. In the first quarter of 2022, they had $16.7 billion of net income. If you include the other comprehensive loss of $2.9 billion, their net income is $13.8 billion. Some companies combine the comprehensive income statement with their regular income statement. Other companies separate it out. Just in the first quarter alone, they had an unrealized loss of $2.9 billion. But at the end of the first quarter, they had an accumulated unrealized loss of negative $2.5 billion. Because this top chart is the balance sheet, which includes everything in the past up to that point. And this bottom chart is just the income statement for the first quarter. This is Microsoft's Statement of Changes in Equity report. At the end of the first quarter in 2021, their equity was $134.5 billion. Let's go back to the balance sheet. You see the balance sheet says $134.5 billion. Their equity balance at the end of the first quarter of 2022 was $162.9 billion. Let's go back to the balance sheet. You see that's the same number in the balance sheet. Now let's see how they came up with $162.9 billion. It's broken out into three sections. The first section is common stock and paid in capital. The second section is retained earnings. And the third section is AOCI. And we have to sum up these three sections to get $162.9 billion. So in the first section, the beginning balance of common stock and paid in capital is $84.5 billion. They issued $500 million of common stock. They repurchased $1.3 billion of common stock, so that's a negative. And they gave their employees $1.9 billion of stock. And there's $169 million of other. So their common stock and paid in capital balance at the end of the first quarter is $85.8 billion. It went up from $82.3 billion. And these two numbers are on the balance sheet. All this detail is not on the balance sheet. That's why people look at this report to get this type of information. Retained earnings at the beginning of the first quarter of 2022 was $75 billion. Their net income was $16.7 billion. They paid $4.6 billion in dividends, so that's a negative. They bought back $7.5 billion of common stock, so their ending retained earnings was $79.6 billion. They report stock buybacks in both this section and this section. I'm not really sure why they do it in both sections and not just one. I always thought paid in capital could only go up when they issue new shares, and when they buy back stock, it reduces retained earnings. But for some reason, they add buybacks in this section. Their AOCI in the beginning of the first quarter is $437 million. They had an unrealized loss in the first quarter of $2.9 billion, so their balance was negative $2.5 billion. So when you sum up this number, $85.8 billion plus $79.6 billion minus $2.5 billion, you get your equity of $162.9 billion. You would think an increase in equity is a really good thing and a decrease in equity is a bad thing. If the company's equity increased because they had high net income, I would say that's a good thing. But if their equity increased because they issued lots of stock, I wouldn't say that's a good thing. That's more of a neutral thing. A company like Boeing has negative equity because they bought back so much stock. When a company buys back its own stock, it reduces the cash balance and it also reduces their equity balance. So to summarize, equity is the value that would be returned to a company's shareholders if all assets were liquidated and all debts were paid off. And the more common things equity includes are the dividends paid, anytime they issue or buy back stock, unrealized gains or losses, and non-controlling interest. So I hope you learned something new in this video. Let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.